What if I told you oil, not GDP, made the dollar dominant? This is the story of power, deals, and global plumbing. Think of money as a network. Nodes trade value. If one node becomes central, it controls the flow and rules emerge. For decades, the system leaned on gold, dollars exchanged for metal. That stability kept trust in the post-war economic order. But by 1971, the US printed more currency than gold reserves. Countries started asking for metal. Panic spread in the system. Nixon flipped the switch. He ended convertibility. The dollar became fiat, value by trust, not a metal peg. New problem emerged. If money isn't backed by gold anymore, why would foreigners still accept it? The US needed global demand and fast. Enter oil, an everyday commodity, but also the planet's energy lifeblood. Everyone needs it. That made it a powerful lever. The US struck a deal with Saudi Arabia, sell oil only in dollars. In return, protection, weapons, and political backing. Saudi leadership then nudged OPEC partners to follow suit. A convention formed, oil priced and sold in dollars worldwide permanently. That was the birth of the petrodollar. It wired oil markets to the US currency. Suddenly, dollars were essential to buy energy. Take any country that imports oil. To fill tanks and run factories, they needed dollars, so they earned, bought, and stored them. Central banks piled up dollar reserves. Trade invoicing, commodity pricing, and global contracts favored the greenback. Demand became nearly automatic. That structural demand was like a machine. Feed it oil trades, and dollars circulate back to the US financial system constantly. With global appetite for dollars assured, the US gained a privilege. It could run deficits others couldn't easily sustain without consequences. Printing money became less dangerous. Foreigners absorbed excess dollars by buying assets, bonds, and commodities priced in dollars abroad constantly. That fed Wall Street, funded wars, and underwrote American influence. Dollars flowed out and came back as credit to the US. Think of it as exporting a currency machine. The US outsourced demand and kept the printing press humming without immediate pain. But every machine has failure modes. Power becomes political. The US learned you could weaponize finance through dollar control tools. Freezing assets or denying dollar access can collapse deals overnight. Sanctions became a new lever of geopolitical force worldwide, dramatically. So rivals started to move. China, Russia, and others explored trading energy in local currencies and building alternative clearing systems. China pushed yuan-denominated oil contracts and strategic reserves. Russia accepted other currencies for gas. Small shifts pile up over time. Saudi Arabia itself has quietly experimented with other currencies and partnerships. The original pillar of the system is beginning to wobble. If demand for dollars slips, the US loses some flexibility. Printing power weakens. Interest rates and inflation could move differently. That isn't an overnight collapse. The dollar still sits on huge economic depth. Markets, institutions, and investor trust remain strong. But power equilibria shift slowly and then quickly. Small policy changes and deals can redirect flows that took decades to build. New pipes are being laid. Alternative payment rails, regional currency swaps, and commodity-for-currency deals bypassing dollars entirely worldwide. Digital currencies and tokenized energy contracts could also reroute trade. Technology makes clearing systems faster and less centralized today, too. For the US, this means rethinking leverage. Military ties won't alone guarantee dollar dominance if economic plumbing changes fundamentally soon. Investors watch reserve holdings, bilateral trade deals, and oil invoice currencies. These are the signals of a slow systemic shift. For oil exporters, diversifying currency receipts reduces exposure to sanctions and US influence. That's a powerful incentive to change now. But coordination is hard. Global markets are sticky. Replacing long-standing invoicing practices requires trust, liquidity, scale, and time everywhere too. Still, shifts compound. A few large energy deals in non-dollar currencies could cascade through trade networks like a software update. So what does this mean? The petrodollar built American influence. Now that engine faces new inputs and potential rewiring ahead. Energy, money, and power remain entangled. Watch the deals, the invoicing, and the alliances. That tells us where influence will flow.